Good afternoon, everybody. My name is Jay Martin. I am the CEO of Cambridge House International and an investor in many early stage companies in the commodities, innovation, and health science sector. We host a variety of summits here on the YouTube channel, and today I have a short feature on the electrification of our world. Now, anybody who watches my channel knows that we've talked about this energy transition occurring around us many, many times, but I've really only ever focused on the copper and the nickel space, with what I think is good reason. But today I want to go a little bit deeper into this. Now we're going to talk about copper. We're going to open up with a discussion with Gianni, Kavasovich, an investor, author, and energy strategist, and we're going to dive into the copper sector. But then we're going to get into lithium with one of the most interesting entrepreneurs that I know in the space, Dirk Harbecky, the CEO of Rocktech Lithium, who recently attracted the likes of Peter Thiel, Facebook's first outside investor, co-founder of PayPal. Peter Thiel recently purchased 5% of Rocktech, and we're going to get into why and the unique model that Dirk's building at Rocktech Lithium. We're also going to talk to Peter Cashin, the CEO of Imperial Metals Group, and we're going to get into scandium, which is largely a misunderstood mineral. And so before the newsletter writer sector picks this up and starts promoting scandium as the next hot market, I want to have a more thorough understanding of what it is, what it's used for, and how it's acquired. So that's what we're going to talk about today. Thanks for stopping by. Please hit subscribe if you like what you see here. We post content 4 times per week, one-on-one conversations just like this, and I'd love to see you. Okay, my first speaker is Gianni Kavasovich, investor, author, energy strategist, and keynote speaker who appears all over the world, including at many of my conferences over the years, and we're diving deep into the copper sector. Enjoy.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, what's up, guys? Jay Martin here, CEO of Cambridge House, and I'm joined right now by Gianni Kavasovich, an investor, author, modern energy expert. Gianni keynote speaks all over the world, including at many of my events over the years. Gianni, it's great to see you.
Greetings from Zagreb, Jay, and it's a very timely update. We're going to talk about energy, commodities, and this trend, this decoupling of old energy from new energy. And of course, we're talking about electrification and copper.
I love it. I love it. I'm excited to dive into this with you. And as you just mentioned, Zagreb is 100 kilometers away from the birthplace of your hero, Nikola Tesla, correct?
Indeed, he's Serbian, but he was born in Gospić, Croatia, and both countries celebrate him. And he's the man who invented modern electricity, and everything comes to the fold. There's a company based out of Northern California named after him, and they are a energy disruption company. They're changing the way things are done. And now as everyone piles into this trade, it's on. And now you have, to fan the fires, everything's, becoming commercially viable. And now they're going to invest in excess of $10 trillion to accelerate this pivot towards, they call it the Green New Deal. Some call it renewable energy.
Sure.
I call it copper. The greener and cleaner that we create, transfer, and utilize energy, the more that is demanded of copper. We used to talk about the growth rate for copper and what's going to happen. Don't lose any sleep at night. Let's not spend our precious time talking about the demand, because it's going to be, ladies and gentlemen, middle of the case scenario, 6% CAGR growth rate for copper for the rest of this decade and going into the 2030s, as we go from 20% of final energy usage today, which is electrification, and that's going to go to 50%. We used to say 2050. Now it's going to happen probably by about 2040 with all of these accelerations, which means as much copper as was installed from 1890 to today, we will duplicate that, but in the next 20 years. The real thing people need to be focused on, the opportunity, where's it going to come from? That's what we're going to talk about.
Okay, Gianni, I love your passion. It's so great to connect with you. Okay, look, so you talked about a lot of big things there, and yeah, call it whatever you want, Green New Deal, you call it copper. But you know my audience, Gianni, they're retail investors. They're just like me. They're looking for the smartest home for their capital. And so when it comes to the copper sector, what should investors be focused on? And you just mentioned location. And I guess my curiosity goes, where is this copper going to come from? Not necessarily the mines, but the countries. And what's on your radar?
Well, Warren Buffett likes to invest in businesses that have a protective moat. the copper mining business has many moats. One, the technological moat. We haven't had a lot of advancements like they have in oil and gas and other things.
Sure.
And geologically very rare, very scarce. Where are the deposits that we found? Where are the current mines that are in production? Happens in very few countries. So we can look at the data where what used to be a bigger arena of companies, when the China super cycle started, there was a lot of mergers, acquisitions. A lot of those companies are gone. So you really have to focus on only 13, 14, 15 CEOs of the major copper mining companies or integrated mining companies. What are they doing? Where are they mining today? And where will they mine in the future? And these companies collectively, including a lot of the guys that present at your shows, the industry spent over $100 billion looking for, delineating the future deposits. And we can actually look at that data now, and we can extrapolate where's the future of copper mining, of the stuff that's being built, and what's it going to cost for these companies to actually build these projects. You can aggregate, and many people have done this, and just to accelerate people familiarity, when you look at the analysts that look at what's the CapEx for the next wave of copper production, there are about 21, 22 projects being built right now that will give us metal by the year 2025. Right now, before cost inflation, $65 billion, which will give us a metal yield of 3,300,000 tons. That means the CapEx per ton of production, the intensity, is now $20,000 per ton of production. Let me clarify what that means. So if a company wants to produce 100,000 tons of metal out of a project, we know based on all this hard work, all these studies, it's $2 billion for every 100,000 tons of metal that project will eventually produce. It's ruinously expensive to delineate these projects, to build them, and it only gets worse because the next batch of projects, I'm talking 2025 to 2030, a lot of them may not even be built. They're in funky places. A lot of them are having a hard time with permitting. The costs before cost inflation, because certainly if all these commodities are going up in value, there's going to be cost inflation. But before that, based on the studies that they've completed, it's now going to be $2.5 billion for every 100,000 tons of metal production. So they've got some tough choices, these CEOs. They basically have four options. And one, they're going to have to go to high elevation. We're talking about Peru, Chile, Ecuador, perhaps. Right. And or number two, they're going to have to go to politically less stable jurisdictions or places that do not have a long established copper mining culture, or they're going to have to go to historic copper mining camps like Australia, like Arizona, Nevada, British Columbia, Quebec, and the places that they're already comfortable. And the fourth option, of course, is to simply go and look for new deposits. That's not going to help us for the next 10 years because it takes, on average, from discovery to the bankable feasibility study when the decision's about to be made, 20 years. They don't have the time. They need to accelerate that, which is why you need to look at companies that have established deposits that are at, say, year 15, that are in good locations, because I cannot underline this enough for your audience. I don't think these companies are going back to some of the sensitive areas. I can give you many examples. I'll give you one. Reko Diq, it's in Pakistan. It was a joint venture 50-50 with Barrick and Antofagasta. Now that project's basically been dropped and they're looking for some kind of remuneration there. Who will eventually develop that? It is not going to be any stock listed copper mining company. And it's not, I don't believe it's something that's going to be built in the near term. And there are other such projects. It's going to be tough, which means it's going to be hard for these companies to replace copper production.
I'm with you. And that's been an increasing theme in the conversations we've been having on this channel is jurisdictional risk, right? And so you called out one project, but I guess what I'd love to hear from you is where are companies going to be comfortable looking? Therefore, where should investors be comfortable looking when you're looking at those further developed deposits?
The number one jurisdiction in the world, in my opinion, and this is based on many, many interviews. And remember, I did the keynote at Santiago, Chile's famed copper dinner in April of 2017, where the who's who of the copper mining and fabricating industry gets together, and I was invited to keynote that conference. I know a lot of people in the copper mining business, and I can tell you that from my discussions, Arizona is the #1 jurisdiction in the world if they could have a deposit of merit.
Yeah.
And the rest is the rest. I do believe that Peru and Chile, there's a big future there. Peru's had a lot of development. Maybe they want to decelerate that and sort of digest what they've already built. And Chile. But you have to pay for this stuff, Jay. The reason the average is $2 billion for every 100,000 tons of metal capacity is because these projects, you have to pay for the water, the electricity. To build the mine, you got to move, 2,000 guys, maybe 3,000 people to build it. And you have to have maybe 500 or 600 people working there for 30 years. All of these things have to be paid for. So when you're talking about that CapEx, so let's just say a large copper mine is actually 200,000 tons of metal. So based on those studies that I just talked about, that would be $4 billion on average to construct a project that could give you 200,000 tons of metal yield, because you have to pay for all these things. But what we have in Copperbank, and I need to segue into that because I think Copperbank is something people should be looking at. Our flagship project is located in the famed copper corridor of Arizona. This is the area that was the largest production area of copper in the world for 100 years until Chile surpassed it. They have a long-established copper mining culture. All of the infrastructure that's required is, let's say, more or less there. United States has one of the lowest tax regimes in the world, 21% now, as people will recall. Even if the Biden administration raises it a little bit, it'll still be amongst the lowest. So what does it cost to build a mill that will operate 0.4, 0.5% copper in Arizona that will give you 100,000 tons of metal? The answer is about $700 or $800 million. That is a power of magnitude cheaper than these other projects. So what else must you pay for? Well, in our case for Copper Creek, and I want to be very specific, our strategy is to move the project forward with an open pit scenario. So there's 4 ways that we can create value as we pursue this strategy. And that's important because, as I just articulated, this should be a relatively low CapEx project to build compared to many of our peers. And as we pursue that with the drill bit, with optimizations, with trade-off studies, and incorporating a higher copper price. The studies that have been done at Copper Creek are historical in nature. Copperbank does not consider them to be contemporary, but they were done to a 43-101 standard, so we can use them with that caveat. What did those historical studies tell us? IMC out of Tucson, Arizona did an open pit resource calculation for Copper Creek, and they released it in the year 2012. And they used $2.90 a pound copper. Okay. And if you look at a block model for a project like that, you have to, they used a 0.2% copper equivalent cutoff. So can you now use a 0.15% copper equivalent cutoff using a higher copper price, because now that ore becomes more valuable? How many blocks at Copper Creek are we going to be able to bring in using that sensitivity? We're going to look at adding some other byproduct credits that were not included. So will that increase the value of certain blocks? And most importantly, if people have been looking at our news flow, we are going to deliver a tremendous amount of news for the balance of this year and into next year, because we're looking at, as per my past press releases, to establish a 20 to 30 drill hole program to look at nearer surface resource. So we want to add value with the drill bit. Okay. And that's important because we're focusing on these hydrothermal breccias. There's the highest concentration in North America occurs at Copper Creek. It's at the geological intersection of the 2 major trends of Arizona. And it's endowed this area with these in excess of 400 breccias. Only about 40 have been drill tested to date. So our consulting geologists they're at the field right now, and we're looking at using a leapfrog model and a lot of other data and science to come up with a multi-phase drilling program so that we can as well endeavor to add more resource near surface with the drill bit. So all of these different initiatives will culminate in a resource update, which our consulting geologist Mark Fowl will do for probably early in 2021.
Okay.
And what will it look like? What will the size of this resource be? Because based on that historical resource estimate, it's already 500 million tons of measured and indicated at 0.44% copper. And then we have an additional 490 some odd million tons of inferred at 0.34% copper. And that's important because if you look at the grade of the 7 or 8 largest copper mines in Arizona, what's the grade, Jay? 0.3, 0.32, 0.4, 0.41. Grade's pretty good at Copper Creek. So we think that it is a prime target for a major mining company to come and look at Copper Creek and look at that as being that it's at year 15 in that 20 years sort of for discovery hole until you move it towards more of a bankable feasibility study stage.
Right.
I'm the custodian of the project. It's crystal clear. I'm not going to be building any copper mines. And we look to do something potentially in a very creative way because I can't eat my shares, Jay. I want to highly motivated the team.
Yeah.
Monetize strategy.
So a couple of things you said there, I just want to pull on. We have a lot of gold, silver companies on the show and a few copper companies, notably less, just because there are less that I think investors should take a look at. The core reason is that the exit strategy for a copper exploration development company, sort of the exit strategy, there's far fewer of them compared to a gold, silver project, right? If you're looking at, developing an economic gold deposit, silver deposit, or looking for that exit, that acquisition, your opportunities are numerous compared to the copper sector. To your point, the likelihood of, you said it, you're not going to build a copper mine, right? And your suitors are far fewer than they are in the precious metal sector. And I harp on that investors have to focus on that. When you're looking at copper projects, you can't apply the same rules as you would in the precious metal sector.
No, you can't, Jane. You have to look at location once again. Of the 21 projects currently being built, where are they? Russia, Kazakhstan, Congo, Serbia, Chile, Peru. They want a project. They're going to want projects in places like British Columbia, like Arizona. I told you before, they spent $100 billion collectively looking and developing these projects.
Yeah.
Using the data, a lot of misses. Do you know that it costs to establish a measured and indicated pound in the ground costs now 4 cents. 4 cents. So if you want to find, based on those historical studies at Copper Creek, we've got 8 billion pounds in all categories, and people must look at the tables on my presentations to understand that talking measured, indicated, and inferred for Copper Creek on a historical study. But it's 8 billion pounds, all categories. It would cost, based on those averages for these companies, 4 cents times 8 billion pounds, you do the math, 300 million bucks. That's why in the last cycle, what was the average transaction value and there's 30 transactions to look at. They ranged from 3 cents to 10 cents a pound in the ground. I believe, because the copper price is now near an all-time high, and it is never going to be, I believe, a better 10 years for the copper mining and fabricating industry. Because it all starts with the cable makers, the motor makers, the transformer guys. Business is going to be better than it has ever been before. They are going to be buying lots of copper, which means the copper miners are going to be producing lots of copper, and they need to replace reserves. So I believe they're going to buy resources. They're the ones that are going to be able to convert them to reserves and put them eventually into production. But it can only happen with a higher copper price. And they will pay because they've done it historically, and they know, Jay, they know you don't get lucky. You don't delineate a measured and indicated copper pound at 4,000 meters or in Russia or in the Philippines or in Papua New Guinea, because it's ruinously expensive. So is it plausible that something like Copper Creek, we're trading at 1/2 of 1 penny per established pound in the ground? Here's more metrics for you. Copperbank acquired projects from other listed companies. We have 81 million shares outstanding, and we're not going to have a lot of dilution. We own everything on a 100% basis, okay? We're trading at 60 cents. So our market cap is about 48, 50 million Canadian. The previous market cap high of everything we own would be like $3 a share for Copperbank. That was once upon a time. More importantly, there's $120 million of paid drilling, engineering studies, metallurgy on the portfolio from previous operators. That's $1.50 a share. So I can tell you, just in our own personal experience, it was like 2 cents a pound to delineate what's there so far. Now what we have to do is answer some unanswered questions. So spend a few $1,000,000 to build it and they will come, which can segue into a multi-phase drilling program. If we have success, we can continue to parlay that into additional programs. And we are not sellers at these prices. So we're looking at, as my consulting geologist always says, I just said it, build it and they will come. We want to show the industry that this is a project that we believe is definitively has a shot at being an open pit based on the metrics I just talked about. It's initiative, it's drive, and it's a company I think people can look at. Why would a retail investor want to look at Copperbank? We're owner-operators. We don't need a lot of dilution. Through the entire bear market, Jay, we did not issue cheap warrants. Every single financing was done above the market by our group, and we raised just enough to pay for the property taxes and our holding costs, which are very low. So in the future, we don't have to raise a lot of money to pay for these things. Another reason they want to look at Copperbank, it's diversification, it's growth, well-situated projects, and you are not going to have dilution unless it's accretive, and it's cheap. Compare us to our peer group. Fundamental Research put out a research note today, or a couple days ago. Their fair value target based on their document is $1.78 a share. People can look at that document and they'll be able to get it from Copperbank anytime they like. They can contact me if they wish. And you can go through it note by note, detail for detail. Why do they think that? And more importantly, how can we unlock more value with the various businesses? I've only talked about Copper Creek today. We've got Contact, a royalty business, and some very exciting exploration projects. And that's why Copperbank really is a one-stop shop for a retail investor that wants highly accretive, high torque exposure to copper with a dedicated team that is fully aligned with all of our shareholders.
I love it. Gianni, I think that's a great place to wrap it up. Thanks so much for coming on. It's always a pleasure to connect with you and another Vancouver guy, even if you're in Croatia right now. I'm glad we could do it.
Indeed. And people need to look at my book again, Jay. It's very topical. Nothing is stale dated. All the things that I wrote in there are now happening. And we say, never invest in the story on page 16. Invest in the story that's headed to page 1. So we're somewhere in between. It's almost going to be talked about. And when you start hearing people like Bill Gates and Warren Buffett talk about copper, you know, it's interesting.
I'm with you. It's definitely the narrative that our audience is most curious about. And the book is titled My Electrician Drives a Porsche. It's a fun read, super educational, and I highly recommend everybody pick up a copy. You can probably grab it it's Kovacevic.com. Is that correct?
It's on Amazon. It's an ebook, and it's even on Audible.com now. So it's in German. And people can, they can read it as they wish. I think they'll really enjoy it. If they like some of the stuff we talked about today, I think they'll really find it. It's a page turner. It's written like a novel to make it more interesting.
It is. Okay. Thanks so much, Gianni. I appreciate it.
Thank you, Jay.
My next guest is Dirk Harbecky, the CEO of RockTech Lithium. Now, Dirk is one of the most successful and interesting entrepreneurs that I know in the commodities business. At RockTech Lithium, they've recently attracted a rock star lineup of shareholders, including Peter Thiel, co-founder of PayPal, the first outsider investor in Facebook, and Peter purchased 5% of RockTech Lithium. I'm curious as to why, and we're going to get into that now. Enjoy.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, what's up, guys? This is Jay Martin, CEO of Cambridge House, and I'm joined right now by Dirk Harbecky, the chairman of RockTech Lithium. Dirk, how are you?
I'm fine. Thanks a lot, Jay.
No, I'm really happy to have you on, and I'm looking forward to diving into this story on behalf of my audience so we can get a better look and a better understanding I've spent a lot of time, Dirk, this year mainly, and the end of last, covering the renewable energy trade, the various trends that are spinning off of this. And we focused largely on the copper and nickel plays. You know, if you're just beginning to get into the renewable energy trade, that's a good place to start, right? And we've covered that extensively, worked with some great companies. And I want to take a bit of a deeper dive now, which is why we're talking to a lithium company. But I caution investors all the time, you have to be really, really particular when you're looking at these critical rare earth metals, lithium, et cetera, to make sure you really understand the technology and the macro trends that are driving it. So just as always, everybody who watches this knows I start with the people when I look at a story. When we look at RockTech, you know, it's amazing who you've got in your shareholder base. I'm talking about people like Peter Thiel, the first outside investor of Facebook, you know, co-founder of PayPal, well-known billionaire investor. People like Alan Howard, billionaire hedge fund manager from the UK, and it goes on. And then we get into yourself, Dirk. You personally control 18% of the shares, which is exactly what we want to see. So I want to step back a little bit, and we're going to jump into all this stuff and what you're building here. But talk to me first about just the EV trends in Europe that you're seeing right now, and what's changed recently that investors should be aware of, Dirk.
Well, especially in the past 12 months, I have to say a lot has changed. Look, we are working on RockTech very heavily since 2016, when Elon Musk presented the Model 3, and especially when the Chinese said we want to do everything electric. And at that time, I was traveling to China, and I spent then 2-3 months in the country to see if the Chinese are really serious. Yeah, and they were already at that time. I came then back to Europe, had discussions with CEOs of the German car industry, and most of the guys said to me, well, we are never going to produce electric cars. And I said to them, how can this be? I mean, you make most of your profits in China, yeah? You have so many revenues there. And this was the situation in 2016. And since then, a lot has changed. You cannot even imagine from the view of North America, when you are now at the European market. Every day you see a lot of reports about e-mobility. The German car industry, especially, one of the largest globally, has clearly decided to fully go electric. So no one else is discussing about hydrogen or other topics. It is a clear decision to go electric. Every week there are new models that are being presented to the market. And especially we also see this now in the sales figures. Like in the last quarter of 2020, we had in Germany, as an example, already more than 20% of the newly sold cars were electrified. So this is now, I'm talking about the story for a few years. And I see now also with the people I'm talking to that they're saying, well, eventually, you were to a certain extent right. We see it now, it's coming, and it comes really fast here on the continent.
Right. And now, so Europe right now is forecasted, correct me if I'm wrong on this, to be the top electric vehicle market in the world, therefore overtaking China this year. Is that accurate?
I don't think that it is going to happen this year. So at the moment, Europe is number 2, but it is much more difficult to really forecast the Chinese market. It is a little bit less transparent.
Sure.
On the European market, with all the different countries, you have a full transparency of this. Yeah. So it might happen this year, but I'm pretty sure that in the next years we will see that the European car market will be number 1 for the electrification.
Okay. So let's follow that trend, and picking up on a second trend that we've seen emerge this year is called like regional independence. This has been, and we're talking about source country when it comes to these minerals. And a class example right now is, the Biden administration just took office. They're pro-nuclear. They're incredibly focused on generating uranium, therefore, from friendly nations like ideally US, but if not Canada and Australia. So how does the European electric vehicle market, Dirk, impact the critical metals and rare earth metals that are required, and how does RockTech factor into this?
This is one of the most important points for the next few years. And actually, when you look at what the Chinese have done in the past 10, 15 years, China does not have too many resources, but they are securing the raw materials, let's say from Australia, and then they are doing the refinery of these materials in China and selling then the pure cobalt, for example, to the world market. Yeah? Europe was always ignorant about these things until recently. a few months ago, I think 2-3 months ago, the European Raw Materials Alliance has been set up. We as ROCTEC, we are one of the founding members of this, and we are supporting it quite a lot. Interestingly, the think tank behind this idea on the European Union came from Berlin, where I also spent quite some time and had lots of discussions with them. Because Europe has understood now, as you were mentioning, the supply chains are getting more and more regional, especially supported also over the past 12 months, where everyone is really trying to reduce risks. And imagine the car industry so far could really rely on very big suppliers. But the picture is now changing completely. It's a revolution. We have now battery cell production facilities that are growing and being built in Germany by huge scale. So the European Union started 2 years ago to support with special subsidy programs the setup of battery cell firms. But they haven't gone a step further into the raw materials and the refined battery metals. And this is now happening in the past 3-4 months, especially, is with a clear idea of copying the models that the Chinese have built, doing the final refinery steps in Europe because we don't have enough raw materials, and then looking for stable and reliable supply from strong partner countries. Partner countries, for example, like Canada, with an excellent mining jurisdiction, where environmental standards are extremely high, and where you can really also prove that you do a sustainable mining, because the car industry is looking now all the way back in the supply chain to guarantee the sustainability of its product.
Right. Okay. And now your lithium resource is in Ontario, right near the Great Lakes. You're building, I guess, Europe's first plant and converter right now. And this is a trend that you'll probably see continue. Do you think this is the first of many in Europe? What are your thoughts, Dirk?
There will be many coming, but it's very clear that we are well positioned to be the first one. Look, the majority of the shareholders of ROCTEC Lithium, you mentioned a few already. The majority are European based. I would say that around 70% of our shares are in hands of family offices that I also know very well. So we have a strong interest to set something up in Europe. And what is also important, at the moment, most likely, we were discussing the figures about the growth rates in Europe. Europe is probably 2 to 3 years ahead in the development of electric cars compared to North America. Right. So it was a very logical step for us to say, let us be the first to build this bridge between our property and our upcoming mine in Canada. As you said, near the Great Lakes, very centrally located, right? So we want to take the mining feedstocks there, do the first concentration step in the city of Thunder Bay, just at the Great Lakes, and then ship material, lithium products to Europe, and then do the refinery into what you call the lithium battery metals, in this case, lithium hydroxide, right in Germany, just next to the customers. And we have large possible probably customers here. Look, you saw that Tesla is building a huge gigafactory, the largest one globally, in a small city near Berlin. We have VW together with Northvolt building a large battery cell production site in Salzgitter, which is in the center of Germany. And we are currently looking at locations, and are in the final steps of deciding to be just between all the big plants in Germany, so that we can supply our lithium refined products straight to those customers. And for the number of the so-called converters, we are going to build the first one, or at least one of the first ones. I assume that we will see in Europe in the next few years, probably 12 to 15 of these conversion plants, because this is necessary to really feed the lithium demand of the car industry here.
What's the capital cost, Dirk, to build one of these conversion plants?
It is around 400 million euros in capex, And what we are trying to do, we have very advanced negotiations around how to put the financing together, right? You have a debt component, you have an equity component, and you also have a component around subsidies. As I said, Europe is really keen to support, but it is also a lot about the people and how we are implementing things. It is initially, to a certain extent, about trust. because you want the people who are deciding on subsidies and who are deciding on your debt financing. They look at you, they say these are the people that can get it done. They have a great track record. They are doing the right steps. Yeah. And this is a very important thing where I have the feelings that we are so far doing a very good job.
Yeah, well, clearly. Okay. Thank you. Now, before I hit record, we were talking about just lithium supply a little bit. And I touched on, one of the reasons I haven't talked about lithium a ton on the channel yet is because it's relatively abundant. And so you just have to be really careful about picking the company you want. Someone who's cornered the market, I guess, and really ingratiated themselves with the supply chain like you have. But then you countered and said, no, yeah, sure, it's abundant in general, but most of these deposits aren't economic and will never be. So maybe talk to me a little bit about that. Like, what's the general landscape of lithium supply right now, Dirk?
Well, this is indeed a very interesting point. Look, I have over my lifetime so far built up a few companies. And in 2016, when the lithium trend originally started, it was one of my first key questions. Will there be an abundance of lithium in the market? Because theoretically, as you said, there's a lot in the ground. And the second question is always about battery technologies. Can lithium batteries be replaced? Yeah.
Right.
The answer here was pretty fast, pretty quickly, no. So this topic I put aside. Yeah. And then we looked at many projects, and the market landscape at the moment is you have a handful of large producers of lithium. So it's to a certain extent a sort of oligopoly. You don't have a futures market for lithium prices, right? So most of the contracts are directly made between the producer and then the customer, which is a battery cell producer or the producer of the cathode, which is part of the battery, right? And they are trying to upscale, of course, but in our point of view, depending on this demand that we are seeing in the next years, which will be more than 25% demand increase per year. This is something that never happened before to any metal. And lithium is a highly reactive metal. It is the lightest one and highly reactive. So when you find it in the ground with too many other metals, like for example in the brine deposits in these salt lakes in Bolivia, you have a very relatively high content of magnesium, and it is a big challenge to filter this magnesium out because eventually you need a very pure lithium product. So the most successful producers at the moment are the hard rock producers, mostly out of Australia, who are producing around 60% of the global lithium supply is coming from there. And this is like the projects that we are also having in Canada. We have hard rock pegmatite projects. You have 1% or even more on average of lithium in the ground. And this is something you can handle relatively well, and you can produce for relatively low prices. Of course, there are many new ideas, many new projects coming up, but I can only repeat, it is a very challenging market, and eventually you have to become one of the low-cost producers, and therefore the quality of an asset is very important.
Right. Okay. Thanks for that. Now, so just to recap a lot of what you've said, we've secured a resource in a jurisdiction that has a government that's historically been reliable and trustworthy, great history of supporting mining, current administration, we're not sure, but generally speaking, the trend is in our favor. And then, you're building out the supply chain, right? So the conversion plant, the refinery in Germany, right next to the end user, which is where you want to be. And that's why RockTech is strategically positioned. Dirk, what do you have to say to shareholders who will be looking for news in the next 6-12 months, prospective shareholders that are curious and sniffing around the story? What can they look forward to right now?
Well, we are now at the stage where we are doing the pre-feasibility studies and the basic engineering, which is already quite complex for such a converter plant in Europe. At the same time, we have started the pilot plant production of lithium hydroxide, which is important because we have initiated, of course, conversations with possible offtake partners, so the buyers of our product, right? And when you have your first samples out of your pilot plant production, you are then using this for these kind of negotiations. So in the next few months, we are scaling up the team with very high-class people. in Canada as well as in Europe. We produce our first lithium hydroxide and intensify then the discussions with possible offtake partners. I assume that we get into agreements in the course of this year. Yeah, we are then getting into the final planning stages for the engineering work of the converter, and eventually by end of this year or early next year, we are starting to put then the financing for this first converter together, and are most likely starting the construction of this middle of next year. So this is roughly the timeline. So you see, we are pretty close to get to very important steps, which will also cause an interesting news flow over the coming months.
So, yeah, Dirk, I know we touched on this at the beginning. I do want to recap your shareholder base a little bit, just because it's remarkably tightly held. And I think you said it, something like 70% is held by professional investors, money managers, yourself, company management, which is exactly what we want to see. Some legendary shareholders like Peter Thiel, Alan Howard. Anybody else you want to touch on, though, Dirk, that you think our audience should know about?
Well, in our existing shareholder base, we have further investors who are very skilled out of the biotech industry, for example, out of real estate industries. These are all industries that are interestingly related to what we are doing. Because when you look at these kind of interest of these kind of industries, the way how you develop projects, you can learn a lot of this. You can take a lot of experiences, and especially these are also all investors who understand the concept that you are building something big, but that it still takes about 2 years until you can start to generate any kind of cash flow, right? There are many shareholders who are, of course, shying away from this to say we want more companies that are already generating a cash flow. I understand this. These kind of companies seem to be more secure, but of course the upside is much smaller. And our shareholders understand what we are building. They are very much convinced that we will do this successfully, and they see exactly what this might then mean to our share price in the next 2 years. Yeah, and so far it was very important for us. When I'm saying shareholder value, it really means shareholder value. We do not like too much dilution, of course, because we believe in the story and we want to keep our stakes. Nevertheless, I think in the course of this year, we will get 1 or 2 important strategic partners also on board that are giving then also to other shareholders a strategic and industrial proof of concept. I think with investors like Peter, we have very much a financial proof of our concept already. But there will be then more coming in the course of this year. So the shareholder structure will remain and becoming more and more interesting.
Okay, well, now I have to ask, because I'm just super curious. What can you share about your strategic industrial partners? Who are you looking for? Are any conversations on the table? Anything you can share about that? I have to be cautious about these kind of commentaries. You know this. But when I'm talking about strategic partners, these are then the kind of partners, either you are talking about the car industry directly, right? Or you are talking about so-called EPC contractors, which are the people that are building eventually your plant. And EPC is an engineering, procurement, construction company. These are huge international conglomerates that have an interest to get into this new industry eventually of lithium converters, right? But you're also talking about companies that might come in from the renewable energies perspective. What we haven't mentioned, we have talked a lot about electric vehicles, but keep in mind, our lithium is needed for batteries. And when you look, for example, what Tesla is doing, they are also building large battery storage facilities for national power grids. They are doing this in California. They are doing this in Australia. This means that power utilities are companies that are looking now how to secure supply and how to get into this kind of business. It is a power and renewables business very much, and not only electric vehicles business. So you have a certain amount of strategic partners, and we have discussions on all these fronts, of course, because we see the full picture, and we have all these companies also seeing the full picture and the need for lithium supply for them. Yeah, thanks for touching on that, because I think often when we think about the electrification of our world, we go right to cars because they're tangible, they're interface, they're consumer goods. We all use them and it's very easy to understand. But that's really just scratching the surface, right, of what electrifying really means. Okay, look, Dirk, it's been great having you on. I'd love to do this again, especially maybe in 6 months. We've got some more developments to talk about. Thank you for introducing the story to my audience and taking the time. I really appreciate it.
Thanks a lot, Jay. It was a pleasure. Nice talking to you.
My next guest is Peter Cashin, CEO of Imperial Metals Group, and we're diving into scandium, a metal that is largely misunderstood, and I'm looking forward to understanding it better. Enjoy.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now by Peter Cashin, the CEO of Imperial Mining Group. Peter, how are you?
Good, Jay. Thanks for having me on.
Yeah, I'm glad to have you on. I'm excited to dive into this story because we've been covering the renewable trend, the electrification of the world with a lot of depth this year. We've done a few big features on it, but truthfully, Peter, I've really stuck. So when it comes to the commodities and the ingredients involved, they've really stuck to copper and nickel, and my audience has been asking us to go a layer deeper. That's why you're on the show, because I want to talk about scandium today. And, there's a lot of momentum right now behind scandium, and people are getting quite excited about it. But I think most people don't understand exactly what it's used for. And so that's where I want to start. What is scandium, Peter, and what is it used for?
Yeah, scandium is actually a metal that in powder form and a purified oxide form, when combined with aluminum, strengthens conventional aluminum alloys anywhere from 2 to 3 times in terms of strength, relative strength, lightweight, renders them corrosion resistant. So it really does have applications in manufacturing across the full spectrum, especially when we're talking the green economy and reduction of greenhouse gas emissions and the whole bit.
So how does it factor into the green economy? I understand the alloy element, the strengthening element. How does it factor into the renewable energy trend?
Well, in many ways, really. First of all, it's used in solid oxide fuel cells, so green alternative energy platforms, and Bloom Energy in California has that patent. It also factors in, like anything else, if you lighten up vehicle weight, you reduce the emissions. So you improve the fuel efficiency, reduce the emissions on combustion engine vehicles, but more particularly as applies to the green economy, in lightening up the chassis of an EV, you can extend range. And that seems to be a little bit of the limiting factor with EVs right now. That's the bit of the anxiety is, I'd like to get one. I'd like to contribute to a green economy, but I'm worried that I can't go from here to Montreal, for example, in Toronto, and on a full charge.
Yeah. Okay. Now, we've seen 100 of these cycles come and go where a new emerging metal becomes sort of the belle of the ball and everybody gets excited about it. You've been in this business a very long time, Peter. And we were just talking like late 80s, building companies in the resource business. So what I'd love you to do right now is help my audience cut through the noise, because scandium is heating up. A lot of newsletter writers are covering it, right? But can you help my audience cut through the noise and get to the signal? What should they be focusing on right now when it comes to the supply and demand economics of scandium?
You'll get it. I think that's the real issue is there's not enough material currently from the production areas. And most of what we have comes from Russia and China. It was the Russians that found that by adding small amounts, like we're only talking 0.2 to 0.4% scandium to aluminum, really has significant effect on strengthening. So I think the science behind what scandium does to aluminum is well known. The more important factor, I think, is to whether or not the companies that they invest in have a strategic marketing plan. Who are the consumers? What are the consuming areas? Are we dealing with governments? Are we dealing with individual corporations? Or are we dealing with alloy companies? So I think that's the more important thing. The exploration, development, and building a resource and reporting great grades is a very, very small aspect of what these kinds of developments are. The bigger part of a scandium development is the fact that it's an industrial complex, and we're really marketing chemical products to the manufacturers of the world.
Right. Now you mentioned Russia and China. Trend I'm seeing right now, Peter, is like significant focus on jurisdictional risk, proximity to supply chains, all of this stuff. Is that impacting the scandium market as well?
It will, yeah, absolutely. I mean, that's so the hesitance of manufacturers to incorporate larger amounts of scandium is, first of all, there's not enough supply to justify expansion of the business area for that metal. But more importantly, is they want stable supply chains. They can't, as history has shown, that our dependence on China, for example, on critical supplies, and that relates to both metals and to things like personal protection equipment under the COVID environment, has put us under a significant control. And we're under the thumb of the Chinese in that respect. So I think there's a real drive now to develop these continental or regional supply chains, whereby as long as a producer of this material is available and is in close proximity to where the markets are, I think that brings great comfort to the manufacturers.
Okay. Now, just recently, Rio Tinto announced they're going to become North America's first producer of scandium oxide. And what kind of impact is that going to make?
Well, I think, and I'll make a comparison with the rare earth space back in 08, 09, 2011, the big run-up, is that, of all the billions of dollars of exploration and money that was put into exploration for those deposits and the many discoveries that were announced, not one major at any time expressed interest in getting involved with the market. So Rio's announcement of involvement with the scandium space is the first indication of a major getting involved. So in other words, I think they've recognized we've got that market pull recognition that there is money to be made in this space. So it just opens up the market for us. And we've calculated they're only going to produce about 50 tons of scandium oxide. A lot of our stats, the marketing efforts that we found, I mean, just for example, if EV growth runs the way that they predict from now to say 2030, there will be about 7,500 tons of scandium demand per year just to satisfy the EV market alone. And then there's aerospace, and there's conventional automobile, and there's alternative energy platforms. So there's huge upside potential, I think, on market growth here. Right.
Yeah, EVs really just scratch the surface, don't they? When we talk,
just scratch the surface, correct.
Okay, so let's jump into your project, Crater Lake. What should investors focus on, Peter?
Well, right now we've done all of our preliminary work. We've the complex that hosts the mineralization, about 6 kilometers in diameter. We've tracked the favorable horizon around for about 14 kilometers in strike length. Along there, we've already defined 3 resource areas. We've got drilling in them. We're now at the point where we've got the financing from private placement we did in December and again in January to do the diamond drilling, bring one area into 43101 resource spec. We're completing the metallurgy, so that should be done. All of that work will be done in April. We should be in a position to report the resource estimate sometimes in May. And then we've got all the pieces with our marketing, with our resource, and with the metallurgy to do our PEA. And the PEA was a preliminary economic assessment, which will be providing the market with a early financial model of what this operation would look like. And that's going to be delivered towards the end of the summer, early fall.
Okay, Peter, I want to talk about the importance of location and jurisdiction. Before I hit record, we were talking about the idea of regional independence and how this is now a key component of decision-making for investors and company CEOs. How significant is it? How important is it that North America starts generating a domestic supply of scandium?
Well, then we're not going to be under the thumb of another jurisdiction. We'll have the necessary supplies to be able to expand the market and take advantage of the of the opportunity that scandium brings to aluminum, and then further incorporating it into the manufacturing space.
Okay. Yeah. Now, what can investors look forward to, Peter? If we're talking to prospective shareholders, having a look at the story, curious about news flow, what's on the docket 6 months, 12 months down the road?
In 6 months, we're like I say earlier, we're going to be reporting our drill results and bring it into a 43-101 resource report. We've done what's the critical path of these types of deposits is the metallurgy. I mean, you could have the greatest grades in the world, but if you can't develop a path to liberating those from the rock and recovering it as economic metals, then it's just rock. So that's going to be completed. We've done lots of strategic marketing. We have a fair sense of the breadth of the market and the areas that we want to focus in terms of where the consumption dynamic lies and the areas that we think that we're going to hit first, second, and third. So that all that information should be available and ready to deliver in April, May. And then those are all the different points of info required for a preliminary economic assessment. And that will give the market a bit of a preliminary financial model of what this operation could look like and the kinds of revenues that it could generate. And that is going to be delivered sometimes in late summer, early fall.
Okay. And can you touch on your cash position for me?
Yeah, we've got $2.8 million of cash, and we're working on a couple of new revenue streams that could bring in supplement what we currently have.
Okay, Peter, you also put out some news last Wednesday, pretty significant. I'd love you to give us the highlight reel of what you guys put out. Yeah,
in addition to our scandium play, we have gold and base metal properties. SOCOM, the Quebec Crown Corporation, was in an option deal on the base metal play. They were in the third year of a 4-year deal. So what we're going to do instead now, we're going to convert that option agreement into vending the 100% of the property to them in exchange for $450,000 of cash.
Okay.
And 2% NSR. And in addition, they have a 50% interest in one of the 2 gold plays that we have in Quebec. They're going to revert their 50% interest to us in exchange for an NSR, a 1.25% NSR. So instead of having 50% of one of the 2 properties, we're going to have 100% of both gold properties, and they'll have 100% of our base metal property, and we get cash out of the deal.
Copy that. Okay. Thank you for that, Peter. All right. Look, it's been great having you on the show. I'm glad you could make time and we could do this. Thanks for introducing the story to my audience, Peter. I appreciate it.
Thanks, Jay. Really enjoyed it.
Okay, thanks so much for tuning in. If you enjoyed this, click subscribe. I'm a retail investor just like many of you, and I'm trying to find the smartest home for my capital. I do that through conversation on this channel, and we produce about 4 interviews per week with gurus and thought leaders in the sector and company CEOs. Thanks so much for coming by, and enjoy.